Max, welcome onto the Searching for Mana show.
Thank you.
Absolute pleasure. If you could be so kind to introduce who you are at Franklin Templeton and just give a little context around what your leadership role involves, please.
Sure. So I'm the Deputy Chief Investment Officer for Franklin Templeton Investment Solutions. And we're really the group that combines all of Franklin. You could say we're the gateway to the best of Franklin. And we also deal with all assets. So equities, fixed income, commodities, digital assets, those all get combined and constructed into objective-oriented portfolios within my group. And my role as CIO is really to find the best ways to deliver on those results, deliver strong performance with my teams, and solve for new challenges, which is what makes it so fun, is every client can present a really unique opportunity to solve for what they need in terms of reaching their financial and increasingly, I'll say, more broader objectives.
Thank you. So lots that I'd like to kind of cut through and understand the very exciting and broad scope of the role. But I thought we could start with some macroeconomics. If you could give a view on how you see the digital asset markets at the moment.
Sure. So, where we are, we've recently had this drawdown, this deleveraging. I think it got a little overhyped. People forget this is a 70% annualized volatility asset class. It's going to have drawdowns that look quite significant relative to traditional assets like equities and certainly, commodities. I'm not even going to mention fixed income in the same sentence unless we go into like the very distressed portions. So that's expected. And I think in terms of liquidity going away, people sometimes forget that just because something can settle anytime, day or night, 24/7, doesn't mean that it will settle with a buyer or a seller on the other side. So liquidity getting sapped away, that's going to happen until we have a very robust digital asset market. And this is really, or maybe a roundabout way of saying that digital assets look still overall relatively attractive. I think as the asset class gets more built out, you need to start thinking about digital assets as not a monolith. So I would typically never talk about equities as just, this is what I think about stocks. I would break it down further, and I'm sure I will in a minute or two. Similarly with digital assets, when I think about Bitcoin relative to, say, actual gold, I much prefer real gold because we've got a 2,000-year experience of using it as a network asset that holds value. But when I think about Ether and trading ETH, I think about how I'm really buying the rails on which the cars built by the Vanderbilts of the future are going to run. And that's a pretty unique proposition, but that's much more of like VC infrastructure than it is something like a cryptocurrency. And when I think about, DEXs like Uniswap, that's actually investing in the future of exchange methodologies. When I think about Solana and Ripple, it's the future ways of transacting. It's dealing with the underbanked, with cross-border transactions, with all the frictions we're actually seeing emerge as the world in part gets deglobalized because of folks in charge. But everyone else, all the companies, all the consumers still need to trade increasingly globally. So when you have something that can do that cheaper and in a way that doesn't force really complex cross-border transactions with all those frictions, that's a really powerful statement. So that's where I'm seeing a lot of opportunities.
Yeah, and so we'll have on the show sometimes, architects or leaders or founders of a given foundational protocol, and of course they take a broad view, but very much will be long on their own particular stock. So it's great to get to talk to you where we can take more of a broad view across digital assets. So you've cut across many of the core elements. Let's go into a few. Topically, I have recently been very curious to talk to leaders of digital asset treasuries. It feels like a mega trend, good and bad. Would love to hear you give us your view on how you see that category.
Sure. So DATs are interesting. I do get a little bit of a 2008 vibe from some of it. Let me be really clear. You should never lever digital assets. I cannot overstate that. There is no investor type where that makes sense. The only exception to the rule would be if for some reason you need to carve out a bucket where you need to have, say, 75% in cash and 25% in digital, but you want to get 100% of that return. Yeah, you could lever 4x, but the return you're getting is the pure digital asset return in that case. And I say that because there are situations where for numerous reasons you need to do that, but I'm seeing DATs that are actually providing real levered return, kind of like I was seeing structured products that were providing levered return to subprime, but then on top of it was sprinkled really high grade treasuries and other corporate debt. So the whole thing looked like it was AAA rated. It very much was not, and people found out the hard way. So I think that's where the DATs are really dangerous. The other part about DATs that I think we need to remember is if they really do explode, they can start eating a lot of that supply. And if you're dealing with DATs that are buying proof of stake tokens and staking it, now that supply becomes, a driving force of the liquidity. We just saw what happens when liquidity gets sapped. So I think those are the downsides. I just think there's better ways for investors to get their exposure than buying a levered product on public equity markets.
Yeah, thanks, Max. Wise words. With the comment you made around Bitcoin and gold, I've seen comments that you've made that you're more excited for the reason you just mentioned in brief around, say, in Ethereum, where it's the rails, there's applications. If you could just talk us through how, really everything other than Ethereum is considered an alt, but you've now got Ethereum, Solana, XRP, and a few others of some magnitude. And then you've got a lot more coming through third generation, showing some promise if you're interested in looking, further down. How far across that are you? Are you particularly institutional finance long on Ethereum? I know Franklin Templeton, and we had Sandy on the show, takes a really long view on the whole space and is very curious, but as the CIO looking at this space, how far down that chain are you? And love you to point a spotlight on any that you're particularly long on.
Yeah, I think in terms of the level ones, Ether is absolutely the one that I have a long view on. I'm personally very bullish on it, and it is the railroad argument to me. It's truly, there's products that are going to be built on Ethereum. We don't know which ones are going to necessarily, 5-10 years from now become dominant. What I have a really high degree of conviction on is that there will be some that are going to become household names. I think we kind of got a little over our skis a few years ago with Web3, but the trend of really having decentralized applications of data privacy, those are not trends that are going away. They're actually becoming even more important in the age of AI. And so if I can buy a stake in that railroad rather than the rail cars, that's really attractive. I think you can be opportunistic with projects, but that becomes much more of a venture capital type scenario. So some of the products we're looking at is actually going to that, level 2 and seeing where we may want to invest in projects on Ethereum.
Yeah.
But owning Ethereum is a really straightforward way to kind of get a really good beta to all of that in general. Solana is a very different situation, right? Now, that's actually a real cryptocurrency. It's a real method of transacting. I think where a lot of folks I talk to, who by and large are clients, are not experts in DeFi. They're not experts in crypto, but they are asking a lot of questions. The number one thing I usually start with is Bitcoin is not a cryptocurrency in the sense that it is not a currency. It is a store of value. It's a network-based store of value. Solana is a way to actually transact much faster and easier and with much more operational security than you can get for traditional payment rails. That's huge. That is becoming increasingly important. So those would be the two projects that I'm most excited about,
Where do you, broadly or within Franklin or however you want to create the visual to that type of individual, differentiate where you see Ethereum being adopted and Solana being adopted?
I think you're going to see Solana being adopted increasingly by companies that need to do transactions across the world and either don't want to pay to the dominant traditional players, which would be Visa and MasterCard, or for different reasons can't handle the dynamics of transactions. I mean, think about all of the issues we have in this country with tariffs and how that's going to be handled. You can create a smart contract that just takes care of all that on the platform. So rather than and I literally had this happen. I bought something. I actually bought a pair of shoes in London. I had to wait while DHL sent me a note saying, these are the tariffs you're now going to have to pay so we can release the package. It all took way too much time. Would have been much easier if it's all just packaged. I see the total cost, which by the way, you don't see right now a lot of times. And I can just sign everything off and there it goes. So like projects like that being built on those platforms, that's going to be really powerful for transactions. And again, it's cheaper for the business.
But why Solana there and not Ethereum?
I think Solana just has much higher rate of transactions that it can process, so it's faster and cheaper. I think the biggest issue with Ethereum, and we saw this actually during the NFT boom, the gas fees are still just exorbitant.
Yeah,
you don't have that issue with Sol. So I think that's going to be one reason. Now,
so large transaction institution doesn't matter as much. They're looking for brand name, trust, security. The affiliation that other institutions are using it, and perhaps Ethereum is in. Solana, sure. If it's high frequency,
more consumer focused, less institutional focused. I think that's fair, and I think this is part of also where I think we'll see projects on both. I think we'll see transactions on both. I think if I think of like carrying in my digital wallet, like my cash, quote unquote, it would probably be Sol. Like I see very much like in the near future situation where, I'm at a coffee shop in Vienna. I bump my digital wallet. It's a Sol transaction because I'm buying, a €2 cappuccino. I really don't want to be paying gas fees on that are going to make it a $4 cappuccino, right? And be wondering, well, if I buy this cappuccino now versus an hour from now, it's going to be a pretty significant difference in price, right? So that's kind of where something that's cheap, fast, makes a lot of sense. Ethereum, if I'm investing in a company, right, or if I'm making a massive purchase order as kind of B2B transaction, I may not care about the marginally high
and how have you seen that play out, and where are we making that? Where are the institutions? What are the institutions using if it's Ethereum, 1 or 7 of the given L2s, or it comes back to it will just end up being Ethereum?
I think it'll come back to being Ethereum for both kind of transactions. But it's harder to say. This is kind of what I meant where I don't know which projects are going to be built on top of Ethereum. It's entirely possible someone will come out with, say, a heavy machinery L2 that's really well, for reasons I couldn't begin to try to explain. But I know that's a market that's pretty complex. They built this project. It's really well designed for transacting in those kind of assets with all the logistics packaged up in the smart contract, all the regulations packaged up, et cetera. That's probably what those businesses will do to transact.
Yep. If we go to another big trend that we've had come through, we really saw think you guys getting involved, and institutions getting involved with money market funds. So that felt to me like a real proof of concept coming through. And of course, you guys were involved in this with Benji. Love you to talk through that project. And then where I'd like to go, because I know you're across this, is really that RWA trend and what type of asset classes we genuinely are seeing through.
Sure. So starting with Benji, to me, Benji is really a technology platform that is proving a really important concept, which is real-time yield and being able to get paid on whatever time you're transacting. So Sandy actually talked about this in her episode, so I'm not gonna recount everything she said, but one thing was really important is this may not matter for the average investor, but when we're talking about corporate treasurers dealing in hundreds of millions of dollars, intraday yield is actually extremely important. Doing M&A and having be able to do it without concern about like the markets being open, or perhaps especially being concerned about the markets being open, having those assets move on a Sunday, that's really important. So there are real implications.
And you don't naturally think of that necessarily, but it's mega.
The institutional impact has been great, and we've seen a lot of corporate treasuries get really interested in Benji. By the way, these are not, to be clear, these are not digital asset investors. These are people who need that transaction. And this is something that I think I've seen over and over, is blockchain is always the first step for institutions. This is a technology that allows me to do something I simply could not do before in a safer and more robust way. And I think the safety is really important to underline, because people, because they see the volatility of the investable market, they think of this is all just extremely unsafe, it's dangerous, it's the Wild West. And then we have really well thought out, purpose-built technology platforms like Benji, which serve an institutional need very well. And, putting Benji in multiple chains allowed us to actually explore how those chains operate. It allowed us to eat our cooking. It allowed us to meet our clients where they may want to go. That's all been really important. So now let's turn this to RWAs. And to me, that's also turning a spotlight on tokenization, which has been another huge component of what me and my team have been researching in the space, because we can start with assets we already invested, like private equity, venture capital, direct real estate. Tokenizing those does a couple of things. Number one, and this is the thing that everyone talks about, and it's true, it's democratization. We need regulation to catch up, but to me, it's always been very strange that an average investor can, buy one-day YOLO call options on a super volatile stock, but they can't get access to like a blue chip private equity fund. It just doesn't make any sense. Right. And when we think about like the class divide that's increasingly growing across the whole world, and especially here in the US, a big part of it is that the average person doesn't have access to the real economy anymore, which is in private equity. And part of it is because they can't write $1 million check to get into some of those blue chip funds, to get an LP stake in it. With tokenization, they can write a $100 check, again, through their wallet. And now they have a stake in the same exact fund on same exact terms as the largest pension or sovereign wealth fund. That's huge. The other part is for those large investors, this allows them liquidity. So increasingly, when we talk to these very large institutions, they think about something called the total portfolio approach. Really, all it means is I'm looking at my entire portfolio holistically. And when I do that, I need to be able to move, say, in and out of private equity just as easily as I can move in and out of liquid stocks, public equities, right? So the only way to really do that is through tokenization. That becomes the other side of that trade, right? So you need, again, liquidity is something that tokenization enables, but to actually fill that bucket, we need institutions that are interested in selling, and we need retail investors that are interested in buying. And over time, it'll become much more, two-sided, where institutions are buying and selling, retail is, selling and buying. But initially, we created the bucket for tokenization. We need both sides to fill it with the LP shares. So that's one component of it. Then in terms of RWA specifically, think about being able to own a piece of the art market as an example. And right now there's, if you want to actually own a stake in, say, old masters or in, postmodern cubism, you can't. Well, I mean, you can, but you need like $50+ million most.
Yeah.
So this is something where a lot of individuals are interested in that. They're also interested in, if they own a piece of the art, can they have governance around it? So for example, if me and 1,000 of my neighbors decide we really want to bring a certain Picasso to our neighborhood library, well, we can actually potentially do that through the right DAO structure with an RWA that is that actual art piece. Now let me talk back to the institutional level. Let's say I'm a large Middle Eastern country. I want to bring the Louvre to my country. Well, I'm just going to buy a lot more shares of a lot more of those art pieces. And now I can vote in that governance token and actually get them to where I want them to be, right? So that's just one example, but it's going to lead to just brand new asset classes that things that we really didn't think of as asset classes before. It's going to disrupt just completely entrenched markets full of frictions. And I mean, the art world is in particular one that really has that, right? I mean, I've dealt with auction houses and galleries, and they don't make it easy to do price discovery, and they don't make it easy to buy what you want. Certainly at any price, and let alone like what you may think is a fair price, because they're the only ones who are the arbiters of that. So again, bringing it on blockchain, now we see price discovery.
The point you made around Ethereum is where it's just not quite found its complete product market fit. You had Tezos, you did a great job at having a really good ecosystem of artists where there was no cost to purchase. And then you have Ethereum where the gas fees are a massive problem. But you kind of have that prestige as an artist that you want to be on Ethereum, or, let's just say the masses won't come. And then there's not really any other protocols where art has done well. That needs to get fixed.
Absolutely. And we saw that with OpenSea. I mean, I saw that with my own NFT collections, where sometimes I'd want to support like an emerging artist, but I'd be paying like 20% premium, which actually starts rivaling you pay at an auction house for physical art, I guess, right? And I don't really want to do that. So I think that's really important. We need to create a way to have artists of all types be able to sell their art at a price point that makes sense to them. I think one thing you said, which is interesting to me, is the prestige of Ethereum. And it's a really common concept in, traditional art, physical art, whatever we want to call it. Like if I'm represented by the Gagosian, that's huge, right? If I'm at the cool hipster gallery, in San Francisco, maybe that's cool to buy, if crowd. But, if I have a Shopify store, no one cares. I'm not a real artist, right? Like there is that mentality that exists. It doesn't, I mean, personally, as a collector, I buy art that I like. I never buy art as an investment vehicle. It may change when we have tokenized art where I can actually buy like, stakes in periods that are backed by real canvas on, but I think what was interesting with the NFT space, and I think this is why a lot of your digital artists are so much wealthier, is it started as an investment vehicle. Because you're seeing that transaction. So, like if I buy a pudgy penguin, like I'm quite frankly not thinking about how much I love that little penguin. I'm thinking like, holy crap, this can be worth like 5 ETH, in a couple of months. And so it's almost like a different concept. And same thing with programmatic art. Like it shifted
to rarity.
Right. It's the rarity, and it shifted the goal a bit. I think there's a very interesting comment on art and capitalism intersecting within the NFT market, because the artists entered it, really in almost like a supercharged, like Koons or Warhol way. Like, I am in this to actually make money.
Yeah.
And I'm making money through creating art, and those are not incongruent.
Yeah, it's so true. I mean, you had many graphic designers or marketeers who were able to create collectibles in essence, which became valuable because perhaps on a Solana, it was more about trading the investment, to your point, not always, but
Yeah.
that was a lot of the market. And then you have OpenSea, and to distinguish the differences is a vast, tricky thing to do. And, you know, then you start having the curation of galleries come through, but it's not really what the market was looking for. And so I hope, this is just personal anyway, that over the next several years, you know, the great artists will be discovered who use this medium. But that's going to take, you know, the economics, the whole space coming together, and it'll be one of the fun things. The example you give around being able to collect, you know, let's say a Van Gogh by tokenizing, it's certainly been talked about a lot. We haven't really seen that come through at any type of scale. You believe that that concept is going to happen?
I believe it will.
Yeah.
I'll say that if there are going to be traditional partners in that space, like, you know, some of the larger galleries or auction houses,
Yeah.
the first mover is going to have an enormous advantage. But the demand is there.
Yeah.
And it's just, you know, it's kind of like going from selling, you know, horse-drawn carriages to taking that carriage and adding a motor to it, and now you have a car. And the first ones who did that were maybe seen as a laughingstock by the other dune buggy makers, but then they wound up eating their lunch, breakfast, and dinner.
Yeah, I wonder who will see it. I'm talking to a lot of, you know, because of the nature of, like, it's been compared to the Renaissance, right? You have finance, double ledger accounting, and art coming together. And so you get individuals and organizations who've been successful, and they're quite broad, because once you have success, you're able to quite quickly and, quite frankly, creatively get around the space. You have these organizations who are like mini asset managers, who I'm getting more and more where they'll also have an art collection.
Mm-hmm.
You know, they'll have an art fund. And so I think you'll probably start to see that capital to maybe come towards some of the initiatives that you're talking there, which is amazing. So you could, in preference to trying to collect yourself, you could do what you're talking about. Well, you could also say, like, well, this is an amazing track record. They seem to have great taste. It's a good investment. I get part ownership in that, in a fund mechanism.
Exactly. And that's no different. I mean, I've seen, not that I've seen successful ones, but I've seen NFT funds, right? There's really operationally no difference.
Yeah.
And I think this is going to be just, again, as we create a new asset class, we create a new type of active investment into that asset class, as well as passive investment into that asset class. I mean, there's going to be other things like royalty streams from artists, you know, investing in up and coming athletes. These are all things that are going to start coming around, and there's going to be ways, I'm hoping, that will allow someone to, say, bypass the music industry or the talent scout industry, which are not great for up and comers, by going directly to their fans. You know, so, and that works just across all these kind of creative fields that we really haven't had before.
Just before we started recording, you were telling me about some of the initiatives that you have with AI. It'd be awesome to hear, you know, firstly, a little bit like digital asset treasury. There's a lot of noise here. There's, you know, I read the FT this morning, an article about, right, are we in an AI bubble? And you know, it's inevitable that this is possibly the biggest trend of all time, but nonetheless, there will be some stocks that are good and some stocks that are bad. So if you could start with your commentary on AI generally and take that where you'd like. And then where I'd like us to go is how you and Franklin are using it specifically day to day and what you're excited about.
Sure. I mean, look, from AI more generally, there's people here in Silicon Valley who are cashing out their 401ks because they say money is going to be obsolete. By the way, digital and traditional fiat, because AI is just going to take over everything and we will be on its sustenance. So there's that extreme. And then there's the extreme of folks who say this is all slop and AI can't do anything that humans can do. Although interestingly, that's becoming more of a minority because people have just seen the utility. The reality is there's going to be massive winners and losers. This is a huge dislocation, kind of like an industrial age. What people don't realize about that is you're not going to need, 10 different foundational models. There's going to be massive companies within the Max 7 that are going to be losers here, and there's going to be a few winners. So that's what I'll say on the investment side. I'll also say that in terms of trend following, you can follow a trend for a very long time, as was exemplified by everyone who's held the Max 7 stocks for, much of the last decade. It's kind of worked out better than most active equity managers that are spending hours and millions of dollars, picking individual securities. But we usually invest with active managers for those periods of dislocation, not for a long trend. In terms of where AI is going and getting into applying it, it's really about changing how we look at AI from a tool to a teammate. I think that's a key concept. So when we talk about agentic AI, which is the shiny object within the shiny object right now, I think there's not really an understanding of what that means. So an AI agent can do something end-to-end, a complex task. So not tell me about what, the Fed said last, 20 meetings, or summarize all of the, latest earnings rumors on Apple. That's just simple LLM stuff. That's, Google in the Gemini age, right? We're past that. This is more like, take a look at how we write internal research reports, collate information from these third-party vendors, actually go and talk to humans on the management team, and then write me an internal research report in my style on Apple. That's an agent, okay? That is someone or something, however we want to define it, that's going to then bring me that report. And rather than using it as a tool where I might say to an LLM, okay, this is, thumbs down, I don't like it, redo it, I'm actually going to say, okay, thank you for doing this. I'm always polite to AIs in case the AI overlord thing actually does come about. Can't hurt, although it does, I guess, burn a lot of compute out. So thank you for that. But here are areas that you need to actually change because they're not quite what I was looking for. And this is how I want you to go do it. So I'm actually talking to it and teaching it and iterating with it the way I would with a colleague. And it's learning and it's adapting and it's getting better, except in addition to me, I have, 20 analysts doing the same thing in real time. So this is where the human comparison kind of ends, because you've got this almost like hive mind that's learning the same task with multiple interactions in real time. That's really powerful.
Yeah.
There's going to be mistakes made. There's going to be agents that malfunction, which is why for us at Franklin, I'm very careful with how I deploy it as part of the investment process. So our first AI agent, we're calling it Grommet, like Wallace and Gromit. And there's a reason for that, because, Wallace was kind of this hapless farmer. Gromit, the dog, was always there to actually get everything done. Take that for what you will, but Gromit's role is to be butting into our investment committee and saying, hey, you guys are missing this really key thing, or you're spending too much time focusing on this, kind of inconsequential data point when this other neighboring data point is way more important. So why did we build Gromit to kind of be this snarky, analyst who's challenging everyone? Because it's a lot more easy for me to validate that this argument someone's putting forth against my view has merit or doesn't have merit. Now, we could have just as easily made Gromit give us investment recommendations. The problem is that's a way higher bar to validate. So we're starting with having it actually give us criticisms and critiques and telling us what we may be doing better. But as we're working with it and saying, okay, Gromit, actually, I disagree with your disagreement because this is something you're not thinking about. Gromit gets smarter. Eventually, Gromit can start giving us investment recommendations and articulating why it gave us the recommendation it did. And this goes kind of beyond even the chain of thought and the thinking models we have right now. But there's always going to be that part, which is the same as any human. When our neurons fire in our head, we can't tell you exactly how we got from the input to the output. Even the best thinking models are going to have the same issue. It's literally the hidden layers in the neural net where you can't track how that neuron is bouncing around. So you have to have trust. That is the hardest hurdle. How do I trust that this AI colleague is worth me investing client capital on?
That's unbelievable. Well, thanks for the exclusive. That's incredible. And as a Englishman, I like the character that you chose. That's amazing. I find, to the point that you've made, it incredibly frustrating when I've invested my time in training the model and then it misses context. Really frustrates me. Because I'll put the work in, because I know how valuable that is to really understand the nuance. And then if any of that nuance that has been given is missed, I suddenly lose my trust and then immediately withdraw to, okay, if there's time pressure on this, I'm going to need to make the decision myself, or I'm going to need to go back and really put the training in. So this is me using this.
But how do you interact with a human? Like, think about, you got this, new analyst, and they give you a report and you're like, you totally missed the boat. You're going to do the same thing. You're going to say, hey, you know what? Thanks, but no thanks. I don't have time to train you. I'm going to do this myself.
Yeah.
I mean, hey, look, I've done this plenty of times, and I'm sure I've made people upset because I was like, hey, I know you're trying to help, but you just completely failed. I usually say it nicer, but not always. So yeah, like AI works the same way as a human in that regard. The point is, we can tune the AIs a lot better than we can as humans.
Yeah.
And so part of it is how it shows you that it's done the work. There's actually human behavioral training of how the AI agent will interact with different personality types.
Yeah.
So someone who is really impatient, you're going to want an AI that's tailored to their impatience a bit more than someone who's very empathetic.
Yeah.
We can do all this.
Yeah.
There's a really fascinating layer of kind of philosophy and psychology, organizational psychology emerging, which is training personalized AI within the workplace.
Yeah.
You've seen the kind of more human, like consumer application of this with a lot of the stuff Meta's doing with, all their different AI bots, and there's some questionable things, I'll just say, that have happened in that space. But the idea that people are going to vibe differently with different personalities, very easy for us to build AIs that actually do that. For example, I love when people are kind of snarky in their comments, hence we built Gromit to be kind of snarky, and he makes fun of us.
Yeah.
And like, it actually makes us more engaged with it. It makes us go like, okay, this is more than just like a chat GPT. This is as humans, we naturally assign personalities to animals, to characters, right? And so AI can pick up on that, but we can use it for good rather than for exploitation in the workplace.
Yeah. So I love that. And no, I'm very aware of it. And it's also that with humans, you can potentially some of the time manipulate them easier than an AI.
Yep.
But what frustrates me about that is, let's say in an investment committee, you can't, because let's say the characters are contrarian or, know, very forceful with their thinking. And where I'll get frustrated is if suddenly then the manipulation will be from the AI giving me the answer it assumes that I want versus a contrarian comment. So it sounds like you having Gromit, the starts of, independent thinking, which is really valuable in that type of an environment. And I was just listening to Ben Horowitz on a show with Sam Altman, and Sam was talking through these different vibes and how people really empathize and relate to different characters. And I think the same person needs different, a different type of vibe and model dependent on its scenario. Because if I'm getting a playlist for jazz, I might not want the same type of
right, exactly,
model as
and with that too, like another thing you said, what I really want to underline is we don't want a people pleaser model within our investment committee. That's actually one of the original reasons I wanted to build Grommet was I was having kind of a tough time with having folks really prod each other, because people at Franklin are really nice and considerate, but sometimes you need that constructive conflict.
Yeah.
But number one priority for Grommet is to only object when it has a legitimate objection. Then it can wrap it in that personality.
Yeah.
But it doesn't speak because it just thinks we haven't heard from it in a while.
Yeah,
It doesn't.
Don't just play the caricature.
Right.
So
And it's the objective function.
how's
right?
how's that working? So you're on virtual. How do you have your investment committee? Talk me through that.
It's all part of a multimodal system. So we're building Grommet so it can listen in live to our team's conversations. Just like we're feeding it all the information. Like it's not just getting outside data or internal text data. It's getting audio and video and charts and everything. So it's a fully multimodal system in both input and eventually we hope it will be out. But like I'd love to see. I mean, we might get copyright issues, but I'd love to have Grommet like actually be one of the boxes on the Teams call.
Yeah.
And actually be speaking. I mean, that's by the way, that's probably like an easier solve relative to some of the other more technical stuff we're doing. But we're going to increasingly, I think, see that where you're on a Teams call or a Zoom call, whatever, and one or more of the people are not people, they are AIs.
And into the cliche there, talking about work, of course, the doom mongering that we'll all be replaced, and then perhaps a Silicon Valley mentality might be actually the economic cookie is going to grow, and therefore what we've always seen is, yes, there's some pain, but ultimately this is for the good. Where do you land on this in terms of in your organization? Do you hope that in 5 years this means you can be more profitable with a more lean team?
I would say more profitable with the same team is the goal. The reality is in asset management in particular, margins are shrinking. That's a secular force that hasn't changed. Investors are increasingly demanding lower and lower fees. And for us to grow margins, we have to augment the humans. So it's not about shrinking the team, but it's about having each portfolio manager, each analyst be able to cover more assets, more portfolios. So we need them to focus on the things that are uniquely they are capable of. What I've heard folks describe is, AI is going to take care of the joyless work. I don't think that's necessary. I mean, yes, and it's also going to take care of some of the work that some folks really do enjoy. But that's not the goal. The goal is to boost efficiency. Like, for example, right now, it's a lot easier for humans to actually go and talk like we are right now with subject matter experts and get their opinion and then bring that back to the AI. They're going to know much better the intonations, the body language, like reading someone's poker face when talking to a management team or someone on the investor relations committee than, any of AIs that are available now or will be available probably in the next several years can do. Eventually, in some future state, and I'm talking at this point actually well past AGI, right? In some state beyond that, are we going to get to a level where AI can do every single thing that a human can do? It's possible, but it doesn't necessarily mean humans get replaced. It just means you're going to be working in an organization where you have, AI managers, potentially AI executives, and they're working to produce more higher quality output.
Please subscribe to our YouTube, Spotify, or iTunes to make sure you receive all the latest episodes as they are released. So, Max, we're just down the road from, one of the most famous roads in the world. We're
Sand Hill.
Yeah, we're in what I'll call is Silicon Valley, but the San Francisco area, for all its fame. And as you say, there's some of the greatest initiatives ever happening with artificial intelligence just down the road, and you've got operations afoot here. How much do you see what was a financial institution potentially becoming an AI business?
I think the lines are going to get blurred. Like, I just had a meeting with about 20 of our clients, talking to them about a AI-assisted portfolio construction tool that we're releasing to our clients. We started as something we built for ourselves. So again, we can manage more at scale. And then Jenny Johnson said, this is great, but why isn't this available to our clients? They have the same exact portfolio construction problems you have. So we started building that, and we've since released it to several of our clients. It's our Mosaic investment operating system, and clients are looking to use that as part of their
What
core.
type of client is that? Not
Institution.
Who, but what type? Institution.
Institutional. These are large institutions primarily.
How are they finding it?
They're enjoying it quite a bit. It's change for some of them. It's giving them functionality they couldn't have before because they didn't have staff that could do it. For others, it's a really useful tool to try out different allocation scenarios. And we just started building this, right? Like this is first released to clients in beta mode at the beginning of this year. So we have a lot more we're doing. But the point is, I think that technological bridge, which is a two-way bridge, is going to become increasingly important. One of the features of Mosaic, for example, is our copilot named Pixel. And Pixel can give very accurate representations of how we construct different factors within our capital markets model. It can give answers for how we evaluate a certain manager exactly the way that one of our human employees would, because it actually is based on RAG, retrieval assisted generation, where we built these machine readable manuals that cover whole gamut of topics. So now clients, rather than having to call, someone in sales or contact, who then calls me, and I bring someone on my team and we set up a meeting, they can get an answer immediately and it's just as accurate.
Yeah.
And in fact, they're having a full conversation with Pixel about what to do, and Pixel can even help them then take that information and build something within Mosaic.
Yeah.
So that's a new paradigm shift.
Yeah.
And for us, that's a key value add that we're seeing for clients. So the lines are going to get very blurred.
Yeah. Incredible. Well, I wonder where it goes. Impossible to predict, but I do think that a lot of these humongous organizations, there's a book, wasn't there, that came out, which was like Bullshit Jobs. It's a tough one because you're like, well, you kind of want people to have jobs, and sometimes bullshit jobs are cool. But you just suspect that like where the value in large organizations have been is in splinter groups, product groups, and with AI, organizations will be able to condense that. And then where do these people go? I just think that we'll invent new economies. There will just be, as you were talking about in the blockchain space, there will just be new asset classes, and perhaps therefore we have an infrastructure from these massive, platforms, and it's just easier to set up I set an asset manager up. Could I have set an asset manager up 20 years ago? Not as easily. The barriers were much, much higher. So don't know exactly where that goes, but optimistic.
Well, think about it this way. At the dawn of the industrial age, did we know what all the farmers would be doing? Right? They got jobs in factories, and then their descendants got jobs, in offices. And so humans are very adaptable creatures, and we learn how to coexist with our environment. Yeah. Sometimes we, may take advantage of that environment, but we do survive and we do adapt.
So I agree. Try to predict it then. So we're talking what happened, where they went. So we know the megatrends AI. Where are they going? Where's the 50,000 people who work in a bank, or the 50,000 people who work in a professional service firm, or the 500,000 who work in a big tech company? Where are they going?
So I think you're going to see a lot more creative pursuits. And I think you're actually going to see more artists, more philosophers, more musicians, more poets, which, okay, that's not going to be millions of people, but I think you're going to see that need. I mean, look, I can create a hit song in Suno in like 2 minutes. But after a while, you realize those songs kind of sound too polished, too perfect. You can actually tell the human element is missing. I can create incredible art. Like when I'm making PowerPoints, they're all going to have great quality AI art. I've got tuned models that'll deliver something excellent. I still want to buy art made and drawn by humans with, physical mediums. I've actually bought more art since I started creating AI art, because I want that like real connection. There's going to be more people who are involved in industries where you're required to talk to humans, talk to each other. What those are, harder to say. Like, I'm not saying everyone's going to become a therapist or, a guru or an influencer. But there's going to be more need where you work with AIs probably in a workplace, but your job, kind of like, the example of talking to firm management, like peer to peer. I think there's going to be more of that. Is everyone going to also have a podcast? I don't know. Notebook LM doesn't seem to have, reduced the amount of hit podcasts by and for humans out there. So I think there's a lot of those jobs that are going to exist. And I think we're going to have brand new directions that we haven't actually thought of, but it's going to be, I think, much more the creative spark. Humans are really great at the spark, and the agents can then take that spark and make it something more fleshed out. Yeah. And I think that can create entirely new economies. And it's also going to be part of what do we humans want other humans to do? There's an element of that that's really important. I mean, art is one simple example, right? Like, I want to listen to music made by humans for other humans. I want to see art made by humans for other humans. It doesn't, and I like AI music and I like AI art, just like I like NFTs and I like the art that's hanging in my house. They're not mutually exclusive. They're just different things that can coexist.
Yep. Yeah, absolutely. So let's, now that we've got to kind of understand what you're doing, let's understand you a little bit and go back. If you could, really go back as far as possible to set the scene so we can understand the influences you might have had early on that has, really created the success later.
Sure. So I'll start all the way back. I mean, I was born in Russia, in Moscow, to a rocket scientist mother and a basketball coach father.
Wow.
So about as different as you can get. A world about as different, well, maybe a little less so now than it was several years ago, but still quite a different world than here. And because of my mom's job, we literally couldn't even leave Moscow. Like, we, everywhere she went, she needed to get an authorization to do. Eventually, we were able to come to the United States after the fall of the Communist Union. And, this was kind of my seeing capitalism for the first time and seeing like, you can earn money, you can be an entrepreneur, you can like be successful versus, you do what you want to do within, quotas. Like my mom, for example, even though she finished summa cum laude in her undergrad class because she was Jewish, was not allowed to go into the PhD program because they filled their quota. You don't have that in the US, right? And so like, I didn't see all those barriers that I always knew would be there for me growing up in Russia. And I wanted to figure out how to like do something with that. So, I remember kind of taking my first economics class in school and realizing, okay, like this is how this really cool machine that I can see the benefits of, this is how this machine is working. So can I drive this machine? And that became very much a guiding light for me. Started my first hedge fund almost right after college with some really, really smart folks actually here in San Francisco. And it was the first quantitative hedge fund, or one of the first, that really was designed to replicate what a human was doing. So it wasn't like a CTA where it's super technical and looking for chart patterns. It was like, how does a really good human investor think? Can we systematize that logic? And turned out we could. Did really well for the financial crisis, both 2008 and 2009, even as we were trading the very like toxic things. We were trading, sovereign debt across emerging markets. We were trading commodity-backed securities. We were trading options and everything else. And we really were able to, through our signals and that discipline that they instilled, both go short when the market was collapsing and then go long, very shortly after the trough in 2009.
How are you modeling that? You're modeling that depending on what it is with the appropriate investor, or it's an overall algorithm?
There's, I mean, without getting too much
just
into
a little more, but not too technical.
Yeah. But basically the key thing is we had actually two investors. There was a very much like a value-driven investor who would look at whether something is expensive or cheap, how are the fundamentals on all these different securities looking like. And then there was another investor who was very much a momentum trader and looking at what the market sentiment was and where things were going. You could call him a chartist, but it's a little too much of a simplification. And then they had a CIO, and the CIO, which was really the optimizer, would basically determine how much risk budget to give to each of the two investors.
Yeah, cool.
That was the key thing, because the fundamental investor saw the fundamentals deteriorating in 2008.
Yeah.
And the technical trader saw the technicals really start picking up in 2009. And the CIO knew that they needed to give more capital and more risk budget to the fundamental investor in 2008, and then take it back and give it to the more trader-focused model in 2009. So that one of being really the key.
Yeah. How was the basketball coach father, rocket scientist mother perceiving you at this point? Financial engineering, they were happy with this?
So it's kind of interesting. My mother, I think she's quite proud of me, but I remember one thing in particular. I came to visit her and said, "Hey, Mom, this is really cool. I built this awesome signal to reduce the noise that I see in Financial Times series, and I'm using this really cool algorithm called the Kalman filter." And she looks at me, she's like, "Yeah, that's really cool. About 40 years ago, I used the same exact algorithm, actually, the same Kalman filter to plot the trajectory of Sputnik to Mars." So, I was like, okay,
Trumped.
Yeah, very much so. And it's just something where, for me, it was really interesting. Like growing up, I kind of hated math, and I do blame my mother for this a little, but she kept telling me that I needed to make my solutions to math problems more elegant, and I didn't really understand why, because I just kind of wanted to get the answer and move on and do something fun. But once I started applying math, really honestly, like kind of not even in school, but once I started this fund, then I was like, oh, well, if I make something more elegant, it's faster. Make something more elegant, I can understand why it breaks. And all of a sudden that elegance became really important. So I, credit my mom with a lot of the ideas that I've had over the years and like the philosophy that she ingrained in me. I just didn't understand the value of it until I started using it to make money.
And so that's in this area, a few other co-founders, you're having some success in your own business, the American dream. And then what comes next?
So what came next is we actually sold that fund to a larger asset manager. And, I was there for a few years. But then I got a really unique opportunity to come down to Southern California to a large insurance company that really needed someone to build out their investment process. Really from scratch. There was like investment philosophy. Is it quantitative? Is it fundamental? How do you think about risk? How do you allocate, to different investment types? And by the way, we've got north of $30 billion in assets. So I was 30 years old.
Wow.
30 billion seemed like a good book to take. Very round number. It was literally like on my 30th birthday, but I got the job offer. And so I came down to Southern California to do that. And it was amazing. I mean, the team that we put together really was this blend of fundamental research, which covered things that the models couldn't. Yeah. Because again, and by the way, this goes full circle to what we talked about earlier about AI and where it can do certain things. So we needed humans to look at things like, what is Mario Draghi doing with Europe? How is Ben Bernanke responding to that in the US. And at the same time, we had models that looked at all the relative value of different asset classes. So kind of like outside of those things that the models can't capture, let's capture everything, which means smaller team, much more focused, and they can actually fulfill both sides of the equation, cover the whole world and zero in on really exogenous idiosyncratic things that ultimately move markets. So that was a really, really cool, process that we built. And then 2020 happened, and the process worked extremely well. Like the models actually kind of were going into 2020, we're saying, like market's a little overextended, maybe, don't be putting all your eggs, out. And so pretty neutral risk. Pandemic starts happening. Models have no idea what's going on. I mean, some higher frequency models were picking things up, but generally speaking, like go full on fundamental. Okay, call up folks in the NIH, call up pharma companies, talk to people who are in management teams running major grocery chains, like why is everyone buying toilet paper? What's really going on the ground? And ultimately, like getting all those data points, and then also seeing the fact that we're about to sign in this multi-trillion-dollar plan. And I mean, I remember when TARP was coming about, like in 2008, right? Like that was a tiny, in comparison, program that took many, many months to put in versus, Mnuchin putting in trillions of dollars to work like that.
Yeah.
I mean, we realized like we got to go all in, and that was a fully fundamental view, and it obviously paid off handsomely. But that was how those two models kind of kept together. The quant models kept us out of trouble going into the drawdown. Fundamental models gave us significant confidence to actually go all in. And so to me, that's really a good example. This is why I wanted to cover it, of where we can see things going in the future too. It's about collaboration. And it's about knowing which muscle to use for which task.
Yeah, I love it. Not to walk through everything, we've got the context of, I think, incredible background, early experience. That's a huge project at 30, nice round numbers, and then at Franklin. What about Max the person? So, as this is going on, obviously, like this is lots of pressure on what was a young guy. How's that journey been? And, if you could help us kind of visualize the personal life, the interests alongside that.
Yeah. I mean, my biggest passion for a while has been motorsports.
Yeah.
When I actually had that first really good year in 2008, not a lot of folks had good years in 2008. And, being in my 20s, I did what every 20-year-old who, came into a bit of money did, is I bought a Porsche. And the dealer said, you really got to take this car to the track. You're never going to like understand what it can do unless you're, off public roads. And I was thinking, it's a really expensive car. I'm not getting it all messed up on the track, but he convinced me, took it to the track, and that was it. Like it was like mainlining a drug, and so since then I've just kept moving up and up in motorsports, all the way to racing in a pretty competitive series now. And for me, it's something that's really interesting, where a lot of people think it's the adrenaline. And the reality is, and I have a lot of biometrics that I'm taking, so I'm speaking with data when I say this, like it's actually a flow state, because there's so much going on in a race that you're almost driving an autopilot. And it's thinking through like the strategy and what you need to do with your team, and how you need to plan your pit stops if it's an enduro, and how you need to deal with what's happening with the, in some cases, 20 to 30 other drivers on track with you, planning a racecraft. All of this is happening as you're still, driving this car at triple digit speeds around a circuit. So that to me is what's really exciting. And it focuses, I mean, not focusing is not an option. If you are not fully committed and focused, you will very quickly hit a wall.
Yeah.
And so that to me is what makes it really amazing. But it's also an exercise in risk budgeting and risk management, which is very much part of what I do day to day, but in a very different way, right? Like, do I take this pass? If it's really tight, it's on the inside, well, is the championship at stake? Or is this like the first race in the season and we're in the first corner, right? Like all those things are constantly happening. Do I know the driver? Do I know what they're likely to do? It's almost like playing poker with cars as well, because a lot of times in racecraft, you will kind of, fake someone out. But so when someone does that to me, I'm like, are they actually moving out to the outside so that I can go on the inside? Or are they doing that so as soon as I accelerate, they're going to catch me and then I'm actually going to be way slower coming out of that corner? These are all things that are happening.
Are you in if you could tell us a little bit about the format that you're racing at the moment, are you in a format where I'm trying to gather perhaps performance of the driver is restricted by the cars are very equal?
Yes.
In preference to in Formula One, where, being in the right car can just allow you to win. And so therefore the psychology comes in more.
Yeah. So I'm in a spec series, and I was before in a series that was more like Formula One, where you actually could spend your way to better performance. The thing I love about spec series, it's the cars are fully equal. Like you can change your suspension geometry and things like that, which is part of your work as a driver and as a team. But everything else about the cars is completely the same. It is, if someone is beating you, it is because you are slow, not because they have a better car. It's by the way, another thing about that, which is one reason I like it, because honestly, since I joined this series, I have not even come close to getting any podiums. It's a great ego check. It's like, I might be good at a lot of other things, but I'm just at, starting in this really hyper competitive series. And,
how many laps are there in
really depends on the circuit, but usually you're looking at, 20 to 25 laps.
It's over a certain time.
It's over a certain time, or we kind of try to measure our races to a certain time. And
it's just a loop, or it's corners?
No, there's corners. These are all like Grand Prix type circuits.
Oh, okay.
Yeah. So like, just here in Northern California, we've got Sonoma up north, and we got Laguna Seca, which is quite famous down south, which is actually one great thing about living in this area. There's a couple other amazing circuits nearby as well. So the series kind of covers all of that.
Oh my God, so cool. And so the season, like that's each weekend you're racing?
Not quite each weekend. That would be very difficult to do. But it's, I will say a little bit less than once a month.
Yeah.
Is a season. The good thing about
So
being on the West Coast of the US is, the weather is pretty good, notwithstanding today. I know you're seeing a lot of rain. Yeah. I did have actually my very first race in the series was in a legitimate thunderstorm. And these are open cockpit cars, right? So, you are just coming out, into grid, waiting for, to be released. Like you're just extremely cold. Like my toes are, I'm like, I hope I can, depress the clutch. It's a very heavy clutch. And I'm like, I hope I can hit the clutch because, man, I am like getting frostbite here in my extremities. But, that's part of the thing. But other than that, it's pretty much all year round. Like there's no snow or ice. Those are the two things that would generally, prevent you from racing. But rain just means you change your strategy.
So cool, man. Well, let us share a link to any of these races coming up, and I'll start supporting you.
Well, thank you.
We need to get a podium.
I would love nothing more than to get a podium. It'll take a lot more effort, but I am hoping to get there.
Yeah, that's incredible. So the Mana round will take us on to a few questions I would have had there anyway around similar ways that you might compose yourself through this. So quick fire, answers as short or as elaborate as much as you care. If you have the front cover of one of your favorite publications, then I'd like you to tell me what you would put as the message on it.
Don't be afraid of the future.
Very good. Okay. All right. You have a lot of, I would say, pressure on your shoulders, both on the track and off. But thinking about work, Is there a particular morning routine that you have that, puts you in the right frame of mind, sets you up for the
Yep.
day?
I am very particular about my coffee. I have a cortado that my partner makes me, and that, like, first of all, it requires a lot of effort on their part to actually get up as early as I do, being, a West Coast investor and the market's open on the East Coast.
Yeah.
And that, like, really shows that affection, but also it's really good coffee and it's really well made. And that, like, I need that, like, aroma and that smell.
How are you sat down? Is there a particular, like, are you sitting somewhere for this?
It's usually, she gives it to me in a, in a little cup that I take with me to the office. And then, like, first thing I do when I get in is I open it and I smell the aroma and drink it. But when I'm traveling, which is quite a bit as well, I will go up to a mile out of my way to get a good cortado anywhere I am. In fact, the first thing I do, like, I remember I was flying to Singapore for the first time. Unfortunately, not during the Grand Prix. We didn't book that right. But it was about a month before the Grand Prix, and I was, like, on the plane, had 14 hours from here, and said, okay, best coffee shops in Singapore relative to all of my meetings. I mapped them all out, and I made sure that I had really good coffee before I went in to meet with anyone.
I think I was in Singapore I was there about a month before. I could see all the F1 setting up. I can't remember if the coffee was very good in Singapore.
You can find good coffee.
There was good coffee.
There is good coffee in Singapore.
Okay.
If anyone watching needs coffee tips from around the world, please, hit me up. I will probably be able to tell you where the best coffee shops are everywhere.
Amazing. Is there a particular ritual or mantra that you have that's dear to you or powerful or grounds you?
Yeah. Bow down to no one.
Okay.
I believe that no one should be seen as better than you. And that works both ways. Like, I don't see anyone as being, inferior to me. I think all people should really be treated on the basis of their actions. And, it's important to not let that kind of hierarchy affect you.
Yeah.
So that to me is a really important mantra. And, a lot of times in my role, like, I'm talking to folks who are, billionaires and wildly more successful than I am. It's important that I can still talk to them as equals, and that's served me well. And other times I'm listening to, folks that are just out of college that are junior associates. And I want to make sure I'm never thinking like, oh, well, what could they possibly offer me? Because a lot of times they offer me really unique perspectives that do make it into our portfolio. So that to me is a really important mantra.
We did this huge study across 200 organizations. I won't elaborate more than that. But anyway, the number one trait we found for great leadership was empathy. And then when we dug into that even further, what that really meant was that people were able to appreciate different backgrounds and scenarios, because of course in work, and particularly multicultural distributed organizations of today, it's crucial. Like you say, you have to be able to, equally give value to an analyst or whether it's a very wealthy investor. Easy to say, but harder to actually achieve. And I think on the side you're talking about where, you're a 30-year-old guy taking a 30 billion portfolio on, that really seems to be fewer people who can, get their head around not being fazed by the powers that be or the person who's in the white cloak. And, it's a very, very useful skill. How do you think you've got that? Where does that come from?
I think it comes from actually my basketball coach, Dad. He, wasn't as academically gifted as my mother, but he just had enormous self-confidence. And, it showed. I mean, like, when we came to VS, none of us spoke the language. My dad was the first one to talk to everyone because he just was like, I'm going to figure it out. I'm going to, be someone these people want to talk to.
Yeah.
Even if I don't know what they're saying, I'm gonna make it work. And I think that's the part that's really important. And I think self-confidence leads to empathy, to that other point. I think it's harder to be empathetic if you don't have faith in yourself,
Yeah.
because then it's more difficult to have faith in others, at least without like a codependency overlay, which is not healthy.
So interesting. I think that you've got the hard and the soft influences there coming together. So that's super powerful. If you hear somebody's got a rocket scientist parent, you're like, okay, they're probably clever or been taught some things. Somebody's got a basketball coach for a father. You're like, okay, that's probably somebody who's like, yeah, maybe confidence. And you hear it come together and it's like magical, right? It's amazing. What at the moment, and I don't mean your cortado, keeps you up at night?
I mean, yeah, I tend to not drink them after 4 or 5 p.m. Um, you know, I, I think the state of the world would be a really like obvious thing for anyone who's a macro investor to say. Um, for me, it's really the state of people's relations with each other. It's kind of building up on that empathy component. I think we've seen an incredible decline in empathy. And it's really, I think, a lot of the media that has enabled us to kind of like get just a little bit of the story tailored by an algorithm perfectly to what's going to generate the most reaction. That has been a big part of it. So that really concerns me, because as any macro investor, I'm also a student of history. And what we've seen is the things that make empires fall, the things that make war come up, is when people start caring more about banding with folks who are very similar to them rather than focusing on the truth and discovery. And I'm seeing that around the world. This is not a comment about the US, it's a global comment. And I think part of it is because a lot of people have not been studying history, because it's a lot more fun to watch a TikTok video about, whatever the topic du jour is, perfectly tailored to the way you want it served. And unlike a cortado, sometimes you need that excessive bitterness of reality. You need that, acidity to sink into your bones to understand what's going on. And that's a lot more difficult. I think one of the things technology has enabled us to do is to take the easy way out of everything, including consuming our reality around us. That really, really worries me.
Yeah. I'm going to come back to, just in the final section, a question I have there, but to finish the Mana round.
Mm-hmm.
And for some context for anybody who doesn't know, Mana is your superpower. So in gaming, this might mean you can jump really high, run really fast, perhaps take corners really quickly in a super sports car. I'd like you to tell the audience, Max, what you believe your Mana is.
I think it's understanding complex things quickly and then being able to explain them to others.
Yeah. Sounds simple, but not as simple as as it sounds.
It's a huge part of what I think made me generally a successful investor, right? Like the world is changing, being able to, like when COVID was happening, being able to understand, okay, what is a pandemic? What does this mean? How do I need to translate this to an actionable trade, that my whole team will then be able to understand? Like that was an example. And also one of the things that I've seen like from other quants is there's a lot of really smart quants out there, but they can't explain to investors what makes them so smart. I don't think I'm anywhere close to the smartest quant, but I've always been able to explain my strategies to people who otherwise would never touch a fully quantitative approach.
Yeah. Well, that's super interesting, because you hear a lot of thesis around, maybe 15 years ago, you would have told a student to study computer science. What would you tell them to do now? Do you need to program? There's prompt engineering. And so the version at the moment is become incredible at communication, because that will be a human skill, which would put your mana at even higher stock. Therefore, do you agree with that?
I think you do need a little bit of left brain, right brain. So yes, communication is key. I also think, and this is, I mean, I've done this across my team. I put everyone through a coding boot camp recently. Obviously not the, half the team that are experts at coding, but the people who really have never seen, a Jupyter notebook or knew what that was, right? Who thought Python was a snake that you see in a zoo. The reason for that is not because I need them to become kind of like the quant level coders, but it's a way of thinking. If you can think programmatically, it can make you much more powerful at the prompt engineering, at understanding how the artificial intelligence works. And, we have like drive down the freeway here to the airport, you'll see like 3 or 4 banners for vibe coding. You can't write code that will handle people's money through a vibe. You can probably build a really cool gaming app. I mean, I've certainly done stuff like that, but I also know how to read the code and understand if there's an edge case that's missing. So that part's really important.
Yeah.
The human element, the communication element, like the kind of traditional liberal arts education, probably more important now than it ever has been, because that's going to be, if AI gets there, that's going to be the last place it gets.
Yeah.
So you got to train both. You got to know how to work with the systems that are being created, and you got to learn how to, be faster than them.
So taking a lot of your very valuable time, thank you for being so candid. Really great to get to understand you better, Max, and some of the successes you've had. I'd love to finish with just giving you the platform to cast out and future project. You're talking about in the Mana round, something that someone in your position is incredibly well versed to comment on, which is what's really happening with society because of these trends that are coming through them, and perhaps people aren't studying history as much as you are, and hearing peers such as Ray Dalio at the moment coming out, and he's an incredible communicator to somebody to understand it and make it interesting. But we're not just necessarily in a recession. Currency is being pulled from its it's literally being pulled from its architecture, and talking about AI commentary where perhaps digital assets in currency is irrelevant anymore. So there's just so much changing right now. I'd love you really to, give your thesis on and trying to tie in historically where you think we are, what this next 5 years might look like, and within that, what you hope for as well.
Sure. Well, what I hope for is there, is less kinetic heat across countries like that. That is my biggest fear of it happening. My hope is that the current wars end amicably and we don't get any new ones. Again, historically, we've lived for an extraordinarily long period of peace.
Yeah.
And even the wars now, you could argue, I mean, they're not world wars, right? They're concentrated conflicts.
Yeah.
So what I hope is that we don't get to that state. What I think is going to happen is you're going to see, on the one hand, a rise of neo-globalists, which is going to be largely enabled by people who are understanding how blockchain works, who kind of push through these frictions by whatever means they need to. And they're going to be the folks who are, and folks, really, companies, individuals, the ultra wealthy, and those who are probably going to become rather wealthy, figure out how to solve for whatever they think needs to be solved for in a way that does not have allegiance to a particular country, that doesn't have an allegiance to a particular thought system. And that takes progress as a given, not as something that should be scaled back. And then on the other side, you're going to have the protectionists. And I don't think protectionists are going to win, because it's kind of like fighting gravity in a way, right? So those nationalist tendencies, I mean, they can lead to war, they can lead to that kinetic conflict, but they don't lead to is profit. And we've seen that time and time again through history. And I think that is where we can see kind of, because of what we are building with blockchain, we can kind of see like digital nations emerge with their own governance systems. How that works in the real world, right? How that works with the advent of AGI, which I do think will likely get, either will get very close to or will actually get there. You know, when I look further out to that 5-year mark, I think we're getting quite close. That's going to be a whole lot of questions, which is really difficult for even, you know, someone whose job it is to make long-term projections to estimate. But I think that notion of a nation is going to be flipped on its head. And the neo-globalists, I think, are going to be the ones reaping the rewards from that.
Wow. Good. Thank you so much for coming on the show. Absolutely fascinating what you're working on. And love to talk more about some of your views on a show another time, as we see how these trends pan out. But yeah, thank you, Max.
Awesome. Thanks so much for having me.
Cheers. Thank you for joining us on this edition of the Searching for Mana podcast. We hope you've enjoyed it and hope to see you again next time. Please subscribe to our YouTube, Spotify, or iTunes to make sure you receive all the latest episodes as they are released.